forward also hurt the stock.
Business updates from Marico and Godrej Consumer Products point to early signals of a likely improvement in demand. FMCG stocks rise on cue.
Tire stocks run up on a decline in rubber and crude prices, while oil marketing companies, they perk up on a sharp fall in crude rates overnight.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, as always, Sonal Bhutra as well as Ekta Batra. It's turning out to be a weak session in today's trading session. In fact, the first half was some bit of consolidation is what we saw. But in the last half hour or so, there has been an accelerated decline on the downside. We're at the low point of trade. And this, remember, comes after a decline that we saw yesterday as well. Over 200 points on the Nifty yesterday was shaved off, and now another 65 points. The culprit, the biggest one of them, is the Nifty Bank, which is down almost 0.8% as we speak, 350 points after declining over 500 points in yesterday's trading session as well. And no real support coming in from any other sectors apart from FMCG, which is trying its bit and is the only one which is in the green right now. Reliance is the other one which is currently at the low point of trade. The broader markets, while outperforming, we still have more decliners than advancing stocks. Hi.
Hey Mangalam. Hey Ekta.
Hi Sonal. Hi Mangalam. Yes, absolutely. It's turning out to be a session where we are definitely cautious. It is the FOMC minutes which seem to be weighing on the markets at this point in time. Lot of stocks to discuss, but let's kickstart this show, in fact.
Yes, let's go ahead and do that, because we are going to be focusing on the auto space now. After 2 months of adrenaline rush, auto retail for the month of December 2022 went into lull. Nomura is also cautious on the passenger vehicle sector and expects industry growth to slow down to just 6% in FY24 and 8% in FY25, while strength continues in MHCV sector. To discuss the demand trends, we are now joined by Kapil Singh, who's the head of consumer and digital commerce auto equity research at Nomura, and we'll also be joined by Manish Raj Singhania in a bit, who's the president at FADA. Kapil, good afternoon. Thank you so much for joining us. Well, you're expecting just a 6% growth in PV volumes for FY24. That's where you do see that there could be some slowdown in growth as well. Is it including the SUV and EV makers? And what is leading to the slowdown that you're expecting?
Hi, good morning. This is including the EV and SUV makers. And the reason that we think that this slowdown will take place is because first of all, the base is quite high. We will have almost 25% growth in FY23. And then there are cost increases that are taking place. In some part, it is because of regulatory reasons, where you have the BS6 phase 2 coming up from April, and then you have the 6 airbags becoming mandatory from October. And there is a general increase in interest rates as well. So we think all of these would lead to slower growth. Nonetheless, it will still be a pretty healthy level from an overall industry volume point of view, but it's difficult to see the same kind of growth sustaining in FY24.
Okay.
Right.
Well, we have Manish Raj Singhania, who is the president FADA, joining into this conversation as well. Mr. Singhania, welcome to the show. Nomura is highlighting some amount of headwinds of passenger vehicle growth going into next year. What is your sense? They are estimating around 6% growth in FY24, and that would probably pick up to around 8% in FY25. Can you just detail what are the trends that we're probably seeing in the passenger vehicle segment? Is there any kind of room for maybe even price elasticity at this point?
So for passenger vehicle segment, what is good is we have a good order book available with us. And on top of that, EV models are yet to penetrate this segment. So a lot of things happening there on the booking front, and as well as EV penetration. A lot of new models will be coming in this segment in coming 2 or 3 years. So demand is definitely there, and we can see good. Apart from addressing the existing bookings, we are continuously getting new bookings also in the passenger vehicle segment. So and with the slew of launches in SUV segment, continuously pushing up the EV segment, it's a positive for the overall year. But definitely, as he already said, this kind of growth would not be there. But we do expect a single-digit growth for the year 2023.
Right. You expect a single-digit growth for the entire year 2023. But Mr. Singhania, for the first quarter of 2023 or the fourth quarter of FY23, there are a lot of headwinds as well. I mean, there is the BS6 phase 2 norms kicking in shortly. We have vehicle price hikes which may continue to impact demand. At the same time, with rising interest rates, the cost of ownership of vehicles increases. Could you give us a sense of whether you expect the growth to be back-ended or, front-ended, or what's the kind of estimate that you have for the first quarter of calendar 2023?
So all these factors that you have talked about is definitely keeping a huge stress on the entry-level segment, and we can really see the entry-level segment continuously degrowing on a month-to-month basis. And what is good about this last quarter is, from 1st April, we know BS 6.2 norms coming in that will definitely push up the vehicle prices. So January, February, March will be, if OEMs gives a good schemes, then this can be a very good quarter, because after this, there's a different price increase. So a good time to buy vehicle if anyone is planning. So I think overall this quarter can be optimistic for the PV industry.
Okay, so optimistic on the PV industry, but Kapil, your point on this, when we are talking about this is a good time to buy a vehicle, there are more norms coming in. There was a report I was reading that car makers would have to pay a fine of around 3,600 to 5,800 rupees because of the fuel economy norms, and these are to be complied to by April 1st of 2023. Is that something which could raise or increase the cost of vehicle ownership? And generally, the last 2 months, we were talking about discounting, which had picked up quite a bit. Is that continuing right now as well?
Yeah, so, well, the fines have to be paid by car makers, not really by the customers. So from a customer point of view, there will be no increase on account of this. But there will obviously be portfolio tweaking, which will be done by all the players. And I think to meet these norms, players may need to sell more CNG or more hybrids or electrics. So on that front, no real increase for the customers. But to the point that this is a good time to buy vehicles, I think particularly on the diesel vehicles in segments where vehicles are not having SCR technology, there the cost increases can be pretty large. So in particular, I think this next 2-3 months will be the best period to buy diesel vehicles before the prices go up another leg up post the BS6 phase 2.
Okay.
As discounting is concerned, generally December, because of stock clearance, does see higher level of discounting. So we will see a bit of drop coming in from January onwards. But on a year-on-year basis, we expect for FY24 discounting levels to be higher because stock availability will improve, which was not the case till last year.
Okay. Kapil, I wanted to get a little stock specific now because Maruti, for example, has indicated that they are very bullish on retail demand. But are the numbers indicating that December we had their total sales which were down 9% year on year, domestic sales were down 10% year on year, exports were down 2%. What is your reading of Maruti going into 2023 and in terms of the volumes that they could generate?
Yeah, I'm sorry, I would not be able to comment on stock specifics at this point of time. But generally as a trend, December wholesales is not the right benchmark to look at because there were certain supply issues which were there. So I would not extrapolate for the industry as a whole the December numbers. Also, keep in mind that because we are moving to new emission norms, OEMs would not like to carry inventory as we head into the next year. So January we are expecting will be a fairly strong month and as the channel filling takes place.
Mr. Singhania, let's ask you the relatively tougher question here. While 2022 was good, it was still down 12% as compared to pre-COVID levels. Will 2023 be the year where we actually go ahead and cross pre-COVID levels?
So if you look at the total volume of pre-COVID level, I think it's only the two-wheeler industry which has not been able to perform. Rest of these segments, PV industry created an all-time high figure. Tractor industry created an all-time high figure. Three-wheelers have recovered very well, and commercial vehicles are doing pretty good. So it's only the two-wheeler segment that is not being able to come to the up to the mark of pre-COVID level. That clearly signifies the rural distress continues, and the for a two-wheeler customer or an entry-level PV customer, the cost of acquisition, the operating cost, the interest rates, everything, and the price of the vehicle, everything is going up. So it's like and plus they haven't yet, it seems so, looking at the figures, they haven't yet recovered from the COVID distress also. So all this is a very negative for the two-wheeler industry and entry-level passenger car industry. So government, we really feel at FADA, government really needs to address this segment, and the right way to address this segment, because vehicles are a mobility solution. They are a necessity to this segment. The right way to address the increasing cost in every ways to make it accessible to this customer is bringing down GST from 28% to 18% for this segment. That would really give a good boost to this segment and address the mobility needs of the consumers.
Okay, all right, Mr. Singhania, Mr. Singh, thank you so much for joining us, for giving up a roundup of what's happening in the auto space. Well, that's all about the auto discussion, and with that, we'll move on and we'll slip into a short break now, and we'll put focus on a couple of stocks which are in focus today, tire makers and OMCs. Stay tuned.